Hey traders, I'm Jake with Crow's Nest Capital. Today's Wednesday, August 23rd. So yesterday was a pretty crazy day. The market didn't really move that much. I ended the day, my overall account was down 2 pennies. I have about 20 different positions on. Some positions were up $50, some were down $50, and everything in between. And they all equaled out to down 2 pennies or up 2 pennies. It was the closest to zero my account was in a daily move, daily change ever. I've never seen that before. Not that close to just literally zero. So that was kind of rare. And then today, Peloton took me down. Lost like $60 in Peloton today on the earnings. Opened the market, I was down $100, $80. By the end of the day, I made $20. I was up. So that was great. Didn't really do much. Made some adjustments and just have to wait now. So it was a decent day. Not a bad day yesterday. With the volatility spiking up in the last week or so, I did put a new bear trap trade on. Didn't really collect anything. Went really far out in time. I've never gone that far out in time before. I'm going to test it out and see how it works. Let's dig into the platform. We'll look at the trade setup and we'll look at how the trade would play out over time in the Analyze tab. All right, now we've jumped into the platform. I want to look at two things. One is the Alcoa trade from the other day. I want to see where that's at. And the second is a bear trap trade that I placed yesterday. I want to look at the setup and at where it would be halfway through the trade, where I'm going to look at closing it. Worst case scenario and best case scenario. So let's look at Alcoa first. Open up AA. It looks like the price is about the same, 28.80. The IV rank is 19.6. So it's up a little bit from yesterday. Let's look at the option chain. We'll open up 58 days, October 20th expiration. Look at the 22.5 put. It's trading for 38 cents now. We sold it the other day for 47. So if we were to buy it back now, that would be, well, mid price at 36, it would be an $11 profit in a couple of days. So ranks come down from when we put the trade on. Price is about the same. It's exactly what we want to happen. So $11. It's working, but we're going to keep it on for a little bit longer. We can look at the Analyze tab. So if it were to drop $1, we'd still be making money. If it were to go up $1, we'd be making more money. The only way we'd be losing a lot is if it dropped down to 24, 23. And now if we speed up time here, you can see the break even moving down. So we're going to look to close around 30 days. So we want the price to stay over 25. If it stays here, we'll make about $40. And that's with the volatility staying the same. So with it going down, we'd make even more money. With volatility going up, our break even would be a little bit higher. So that's working out great. Let's look at /MES. This is the micro E-mini S&P. This is the same thing as SPX or SPY. Let's look at the table. Now this trade I did out 177 days. It's not normally something that I do, but I want to test it out. So what I did was I bought a put spread at the 43.50, 44.50 for around 25 debit. and then I went all the way down to 35.50 and sold this put for about the same price. So I collected a very small credit, but it was practically even. So I only had to put up a few $100s in buying power. There's a 98% probability. The delta is 0, meaning there's no directional assumption. And the theta is 30 cents, so I'll make 30 cents a day if the price stayed right here and volatility didn't move. So let's look at the Analyze tab and break this trade down throughout time. So we're going to zoom out as far as we can because this is a large product and it's hard to analyze on the Analyze tab. We're going to open up the sidebar on the right. We're clicked into the Analyze tab here. We'll hit today to see exactly where we're starting from. We're about 180 days. So we're going to cut it in half. We're going to go all the way down to about 90 days. And we'll see how the price changes and how that risk graph changes. See the break even moving down. By collecting a credit, there's no risk to the upside. So the market could just shoot up as high as it wants to go and we'll always make money. Now the beauty of this trade is if the market falls even hundreds of points, we still make money. We actually make even more money. Going all the way down to 90 days, 91 days. We make money all the way down to 37.34. So anything higher than 3,800, around 4,100, we make $200. If the market stays right where it is now, we'll make $120. If it goes up to 5,000, we'll make 20 bucks. If it goes up to 5,600, we keep the credit, which is $11. The only way that we really lose money on this trade is if the market completely crashes. It has to go through our trap and come all the way down past the short strike. That's the only way we lose the money that we put up in the trade in 90 days. The market would have to be below 35.50. Alright, so that's it. We looked at the Alcoa trade. It's working great. We're up a couple dollars. We looked at the bear trap. We're going to set that and essentially forget about it for 90 days and we'll check back in later. That's a new trade out that far in time. We'll probably put a lot more trades on in between there. If you like this video, hit the like button and don't forget to subscribe. Thanks. See you in the next one.